Hi, Ray Evans on the Pegasus team, and happy spring 2026. You know, sometimes in the investment world, there are things that are trends that are somewhat slow-moving trends, and you almost don't know that they're trends until you look several years later. And one of the things that's interesting about doing this for, literally 4 decades now is noticing the amount of publicly traded stock in the United States that has declined over time. And this is pretty crazy. If you go back to 1996, there were 8,000 publicly traded companies in the United States. And there's basically right now about 4,000 publicly traded companies, a 50% reduction in 30-some years. And it's kind of interesting to look too at the valuations. Those 8,000 companies in 1996 had a valuation of about $8.5 trillion, and the 4,000 companies now have a valuation of about $63 trillion, so literally 8 times more. So the total value of the stock market has gone up dramatically with half the amount of literally product or stock available. And so obviously several things from this. First of all, markets are much more concentrated with a relatively small number of very large companies that now drive overall returns. And second, the average company in the stock market much larger, of course, than it was 25 or 30 years ago. Why are there so few, or why are there so many less publicly traded companies right now? For one, companies are staying private longer. There are more mergers and acquisitions, meaning companies are getting bought instead of remaining public. And truthfully, a lot of companies don't want to go public very quickly because there is much more regulation and cost, so businesses choose to stay private in some way, shape, or form. It's interesting, if you look real quickly, I read recently that OpenAI, which is a company that owns ChatGPT, has a valuation, private company, has a valuation that would make it the 10th largest company if it were public. Obviously, at some point, they'll probably go public and the valuation will be tremendously large. But the other thing that's interesting in all of this and important for us as investment people is the role of private equity. And private equity has really stepped in to fill that gap. There is supposedly right now over $1 trillion of capital sitting in private equity funds, actively looking to invest in companies that want to stay private longer. So this is relevant. It doesn't mean that publicly traded companies are irrelevant. It means we've really got to be much more diligent, and your investment managers have to be much more diligent in terms of the companies that are worth the valuation that they trade at moving forward. And certainly in our case, we are looking at more private investments for our clients than we did 5 and 10 years ago. If you'd like a copy of this chart or of this report, ray.evans@pegasuskc.com. I'll get that in your hands. Thanks very much.